these headlines, and I don't think this is going to stop. Again, whether it's in 30 days from now coming into there, we're going to be wondering, are these tariffs going to go into effect or not? And it's going to be creating more volatility. As a technical trader, you go by levels or resistance on the upside. So when you're hitting a level, it is resistance until it is broken. Let's get into some chart action here. Palantir, what a move on Palantir, folks. Blowing away earnings. Their guidance was great as well. Notice this trend line right here. I'm going to show you in a second what that is. It's right around the $98 to $100 level, but right now, it's kind of like caging a beast, right? You're chopping in here. There's only so many times it's going to chop until it's either going to have a massive breakout or a massive breakdown.
The market is shaking up with huge news. Gareth Soloway just dropped some game-changing insights on tariffs, volatility, and what's really going on behind the scenes. With so much uncertainty, how should you be positioning yourself as a trader right now? Stick around, because what Gareth's about to reveal could be a game changer for your next move.
Yesterday, we obviously came into the day thinking there were going to be tariffs on Mexico, China, and Canada. Then mid to late morning, we heard that Mexico had reached an agreement to push off those tariffs at least 1 month. After hours yesterday, we heard about Canada doing the same, so 1 month delayed on those. Overnight, it looks like China's tariffs are going into effect, all right? Doesn't mean they can't be pulled back, but right now, that is the latest, and it's ever changing, so we just have to be nimble as traders to make sure that we are watching the charts, as the charts will give us a cue as we get into the S&P 500. What are we looking at here? We basically have, again, this is, and I just want to show you this. This is the Spiders intraday, even with after hours action. This is where we closed on Friday right here. This is the gap down yesterday. All right. Then we basically had a close yesterday here. This is after hours, a big move up once it was heard that Canada was also going to get a delay on those tariffs. And then overnight, China comes out, or at least the tariffs come out and stick to China, at least for now. And we have a move lower here. So you can just see gap. I mean, this is just the craziness of the new administration, where we're going to get these headlines. And I don't think this is going to stop. I think that, again, whether it's in 30 days from now coming into there, we're going to be wondering, are these tariffs going to go into effect or not? And it's going to be creating more volatility. The positive for us, though, if you're a swing trader, if you're a day trader like myself, you love the volatility, because volatility, if you know how to trade the charts, can breed a lot of profits. Okay, so what are we looking at this morning? Markets are basically flattish. This is again where we closed here, and if we draw across, we can see again maybe fractionally net green this morning, but again not a whole lot as we watch to see any new headlines. Couple things to go over here. Just keep in mind, we have the JOLTS number at 10 o'clock. That's the job openings data. That's going to tell us how many job openings in the US are looking for work, or how many job openings for workers there are. And then we also have Google/Alphabet earnings after the bell today. All right, here's your daily chart of the S&P 500. This is the most recent kind of important trend line action I'm watching on the S&P. And again, just taking a note here, we talked about this yesterday, but we have our lows right through here, and we're still above that, and yet we have these highs right down here, and we're still below there. So essentially, what is this? This is a trend, right? So we're still stuck in this longer term uptrend between this support and this resistance. What we're watching for as technical traders to see the next big move in the market is, do we break to the downside? Or if we break this little double top, triple top up here, then we would go up there as next resistance. So again, just using the charts to tell me what is the most likely outcome. And that's, again, my job is to tell you guys what the charts are saying. It's not to give my personal opinions. Frankly, they don't matter. My personal opinions don't make me money. They certainly won't make anyone else money. It's about what do the charts tell us. And by using that as probability-based data, we can then say, okay, there's a more likely chance of this move in the markets. As long as we follow that, we should generally. If we take a look at the S&P on a longer term basis, and this is a chart that I have to go to the big board to take a look at, right? So this is a chart going back to 1929 on the logarithmic scale. And the reason I bring this to your attention is that we're continuing to watch and see, are we at a major cycle top, or is there just more upside that's going to continue indefinitely? And this is a chart here that this is your 1928, 1929 high just before the Great Depression and the stock market collapse, right? And then the next time, if you draw and connect a trend line, this is your .com, right? So .com high right here, which was a huge, massive internet bubble. And then lo and behold, this is where we currently are, right into that trend line. So listen, maybe we break through this trend line. Maybe this is just a stopping point before a bigger move, but we do want to be cognizant of the fact that we are into this line, and what it tells us is it's a pivotal point. So we might look back in 5 years and say, hey, remember when? Either, oh man, once we broke that, we really ripped up. Again, that's not what I think is going to happen, but remember, what I think doesn't matter. What are the charts telling us? But right now we're below it, so you go with the reversal and rejection on the charts off of that.
Gareth Soloway dives deep into the unpredictable moves in the market caused by recent tariff announcements and political shifts. He explains how the news of delayed tariffs on Mexico and Canada led to a quick rally in the markets, but the focus shifted when tariffs on China went into effect. Gareth then shifts to chart analysis, discussing key support and resistance levels on the S&P 500 and how the market is stuck in a crucial trend. Stay tuned for his Bitcoin predictions up next.
The only other one I want to kind of draw attention to is the NASDAQ Composite. The reason the NASDAQ Composite is also interesting is because if we look at this, this is your 2021 high, all right, and this is the regular chart, not the logarithmic chart, the linear chart. And we look here, COVID low, bear market low right down here. And so where are we? Where was the last high on the NASDAQ? Right at that trend line. And so as of now, remember, the rule is as a technical trader, you go by levels or resistance on the upside. So when you're hitting a level, it is resistance until it is broken. So on these charts I'm showing right now, we are not breaking. We haven't broken them yet. So we have to go by the assumption they are resistance until proven otherwise, right? That's, again, the data-driven method. All right, let's get into some chart action here. Palantir, what a move on Palantir, folks. Blowing away earnings. Their guidance was great as well. Notice this trend line right here. I'm going to show you in a second what that is. It's right around the $98 to $100 level, but right now Palantir is trading up almost 25%. This is a level I'm watching. So in the past, in this earnings season, in fact, we've had many stocks that have these parallels, and oftentimes they gap above the parallel. But almost always, and I say almost because it isn't always the case, oftentimes gaps above, you'll see price come back underneath that parallel and close there. Now listen, this isn't going flat or negative on the day. I mean, that would be crazy. It was great earnings, great guidance, but I'm curious to see, do we come back under this $100 level by end of day? That would be my assumption, which means potentially there's a short opportunity. I'm looking more at the 105 level to use that kind of pseudo even number. But again, if we get up to 105, I might nibble on a short in the Apex Live day trading room and see if we can't pull back to 100 or under 100. But what a move on Palantir. Spotify also up on earnings this morning. Great gains there. All-time high on subscribers. If we look at the price, it's trading right at $5.97 right now. And Spotify, if we zoom out, look at this. I mean, this stock has just been on a tear. In fact, if we go back to, look at this gain. I mean, this rivals some of the AI stocks. $72 back in 2023 to 500. Now it's, I think, just below 600, right? So you're talking about 700% gain. Now, the big question is there a level that we can play here? This is a little trickier, right? So what we have to do is we want to look for those same sort of parallels, and we want to say, okay, well, what if we connect these lows here in the near term, all right? We drag that up there, and we drag it up to the highest point. Now, if we bring this down, this is around 590. So just like Palantir, this is going to be gapping above that level. The question is, does it fade and come back, let's say, to 590 or below to get within that parallel? And again, we can kind of revisit these in trading the close just to see what ends up happening. There's no guarantees. We don't know for sure. But what we do know is historically that tends to happen more often than not. We'll see if these are outliers or do they fall within the range of what usually happens. PayPal getting crushed on the day today on earnings. So this is one stock that is down on earnings, trading around $81 per share. If we zoom out, by the way, this was an old trend line I had put in months and months ago, earlier in 2024, talking about, this is one of my favorite patterns, by the way. You'll see this on charts. You have your inverse head and shoulders kind of right here. Look at this pattern here. And then this, and then you get the breakout, right? And then it retraces to the scene of the crime and ignites. That's neither here nor there at this point because the stock is way, way up from there. This was $50 back here. It, again, traded as high as 90 just a week ago or so. But it is down substantially. First level, and just let me go back to the intraday, so it's trading at 81. First level, there's a very high risk level that I won't play at, let's see here, there's a gap fill. Actually, 79.30 is not bad. 79.30 is interesting, and then below that, there's a very good level at 76.45. So these would be the two levels for potential day trades. Again, I'm not speaking about swing trading or investing, all right? I have no idea. Investing, by the way, folks, just to be clear on this, when I go over charts, I'm looking at shorter term moves. If you ask me where PayPal is in a year from now, I have no clue, and I'm not going to pretend to have a clue. I can have a bias, but it's just a bias. But chart data is most relevant in the near term. Bitcoin had that fantastic bounce yesterday. Again, why did it bounce yesterday? Let's all be fair. It was because the stock market bounced off of its lows. Today, the stock market is basically flat. This was a much bigger bounce yesterday than what the stock market had, right? We know that the stock market still ended slightly lower on the day after coming off massive losses. Bitcoin actually ended green, but this is the kicker. Was it net green on Saturday and Sunday? Remember, the stock market was closed on Saturday and Sunday, and if you look, Bitcoin was still net down from Saturday to Sunday. You know, if you include Saturday, Sunday, and the drop from yesterday. So little things like that you just have to pay attention to because the stock market's closed on the weekend, but Bitcoin was obviously reacting to those tariff news on both Saturday and Sunday. Either way, on a technical basis, once again, the 92,000 level was a gem of a level, and it did create a bounce, and we still have our resistance zone right up here. So support and resistance. Now, at some point, one of these levels is going to break, right? So, you know, it's kind of like caging a beast, right? You're chopping in here. There's only so many times it's going to chop until it's either going to have a massive breakout or a massive breakdown. And so I just want people to be understanding, like, am I buying the 92,000 level as a quick trade? No, I'm not even doing it anymore. I won't be doing it if it comes back down because there's too much risk of it breaking. Would I be shorting the 108, 110 level? Nope, because there's too much risk of it ripping higher. So at this point, it's more waiting to see which way it breaks and then looking for a significant move in that direction. But beautiful action there. Bitcoin, again, is slightly lower on the day.
So what's the best move with all this market turbulence? Gareth's insights show that volatility may be the key to making smart trades, but timing is everything. The charts are telling us more than any opinion can. Remember, in the world of trading, knowledge is power, and following these trends could set you up for success. Stay tuned for more updates and make sure to subscribe for the latest in market analysis. See you in the next one.